It's Sunday, March 21st, 2021. This is David O'Neill, and this is Crypto News Today. Please like, subscribe, share, leave a comment. Here we go. Bitcoin continues its rise past 60,000, and Jack Dorsey's Cash App is now allowing users to send and receive Bitcoin without any transaction fee. On Wednesday, Square's Cash App said its users can now send and receive Bitcoin with no fees. That's pretty sweet. Now, Cash App and PayPal and Grayscale are the ones that buy up all the new Bitcoin. 900 new Bitcoins a day. These three companies buy all of it. The payment companies' move potentially points to the rise in use of adoption of Bitcoin. Responding to the announcement, the Bitcoin's team tweeted out, "You can now send and receive hashtag Bitcoin for free as easily as you can send dollars. Well done, Jack. Bitcoin is inevitable." I mean, that should spur further adoption right there. Because Cash App, you can buy Bitcoin. No fees. And you can send it places. Like Robinhood, you can buy Bitcoin. PayPal, you can buy Bitcoin. Revolut, you can buy Bitcoin. But it's paper Bitcoin. It's not real Bitcoin because you can't send it anywhere. Cash App, no fee. And your ass can send it. Right now, Cash App's got them all beat. Of the easy Bitcoins, right? The easy way to send Bitcoin right now. You can argue that Coinbase is easy, but Cash App is pretty simple, dude. Because you can buy $1 worth of Bitcoin and send it to another wallet for nothing. Wow. Many transactions on the Cash App are already free, but there are some cases in which a user may be charged a small fee. For example, someone sends money via a credit card linked to their Cash App account. That total will include a 3% fee. Now, Square's soaring performance in 2020 helped it close out December with 36 million active customers, representing a 50% year-on-year jump. These guys have PayPal beat big time. The company is looking further to strengthen its crypto business with a $170 million Bitcoin investment. Cash App seems to be ahead of everybody in this. What do you guys think? Let me know in the comments. Ethereum is the second largest public blockchain network by market capitalization and daily trading volume, and it's already gone through remarkable development in its young history, and it continues to be growing, right? Even though there's tons of problems. Institutional interest has been peaking this week. They're not just buying Bitcoin anymore. They're turning their eyes over to, what's this? Ethereum. We'll buy some of this too, says the rich guys. Now, CME's group's launch of Ether futures gives institutional traders a convenient way to get exposure to price movements. And let's face it, the interest in Ethereum tech has not ever been higher. Ethereum is the second largest public blockchain, and people are going crazy at the moment for Ethereum. Recently, the founder of Ethereum said there was going to be a massive kind of fix coming for Ethereum so that you won't have to pay the high gas fees, and they're going to fix it ahead of this London fork and ahead of Ethereum 2.0. I mean, you can't believe how many things are built on Ethereum. I mean, Cardano is nipping at its heels. Now, with all of this, the excitement and interest around Ethereum shows a sign of growing acceptance and an appreciation for decentralization. Now, I found three kind of key reasons for growing interest in this changing market. The acceptance and investment is a broad sign that blockchain technology has become very much trusted by just regular people and institutions now. Ethereum has emerged as the most established cryptocurrency for these purposes due to DeFi and its scalability credentials. In addition, 2020 ushered in improvements in the crypto market structure thanks to growing involvement from spot exchanges and custodian projects, as well as enhanced security and regulation on the spot crypto market. More institutions are warming up to the idea of crypto with increases in demand and the current macroeconomic environment. Some view crypto as a hedge against the inflation we think is coming to the United States and other countries. Looking to the futures markets, institutional demand has certainly helped drive Bitcoin markets up, and Ethereum is being zapped up as well. And part of this London fork that they're doing in July is that they're going to be getting rid of the miner fees and instead burning Ethereum, thus kind of creating less Ethereum. So there will be less Ethereum that is cheaper to use, more demand, but less Ethereum means, of course, the price increases. Remember what I say, the trend is your friend. All right, we've been hearing about these NFTs, right? I made a couple of NFTs too, just messing around. They're not for sale, I just wanted to play with them. But NFTs are hot, right? there has just been the world's first NFT heist, at least the one that we know about. Nifty Gateway, the popular non-fungible token marketplace, issued a statement last week that said a small group of its users experienced account takeovers, and victims claimed that they had their NFT art stolen, or people went in and bought NFTs with their stolen credit card information. And then the NFTs were sold again. The news of this NFT art heist marked what has to be the first digital NFT theft is a new era for art. But with the artist Beeple selling an NFT for $69 million the other day, it shouldn't surprise you. The art heist highlights that security steps and understanding of decentralization of new users is lacking. For example, most of these NFT sites don't even have two-factor authentication, right? Over the weekend, a number of Twitter accounts started tweeting about the loss of NFTs in their Nifty Gateway accounts. One Twitter user claims to have lost more than $150,000 worth of collectible tokens. Another claimed his credit card on file with Nifty was used to purchase more than 10,000 in NFTs, which were in turn allegedly stolen along with the rest of his collection. Now, in a statement posted to Twitter, Nifty said, "Our analysis is ongoing, but our initial assessments indicates the impact was limited. None of those impacted accounts had any two-factor authentication, and access was obtained via valid account credentials." Now, some users of Nifty Gateway, an online marketplace, have said that this basically sucks. If anything Nifty can do about it, they should do something instead of just saying that it's limited. Two-factor authentication is not currently mandatory on Nifty Gateway, but that might change as a result of this compromise. Now, of course, two-factor authentication is an extra layer of protection where you have to prove your identity in order to gain access to the account. A few users were targeted and got their passwords compromised, they said. In the meantime, make sure you have your two-factor authentication on. That just seems kind of lame, right? One victim planned to file a police report and contacted the insurance, but they just kind of laughed at him and didn't even know what NFT was. Now, Brazil is getting its first ETF in South America, south of the border in Brazil. The first ETF will be listed on the São Paulo Stock Exchange under the ticker symbol QBTC11. The primary offering will be for $500 million, only available for qualified investors, and it'll be available to retail investors once the rich people are done with it later in June. Now, Fernando Carvalho, president of QC Capital, said, "Until now, the investor only bought in unregulated markets. Now, with the ETFs, access will be democratized or centralized and KYC'd. I really wouldn't call it a boom. It just means rich people that are lazy and stupid that don't know how to buy Bitcoin are finally able to do it. And you guys are allowed to charge fees and get rich off of it. And the people that own the ETFs don't actually own the Bitcoin. So if you have an exit plan, they're kind of fucked." Anyway, what do you guys think about that? I mean, we had the Canada ETF launching back in March. United States is still kind of like scared, and there's even an Ethereum ETF in the works in Canada, and this has been touted to be the world's first Ethereum fund, right? What do you think? We're going to need these ETF funds for, institutional investors, really rich people that have no idea what Ethereum is. They just want to make money on it and be able to trade in and out of it. They're not going to walk around with a nano ledger. Lots of people are getting into these ETF funds. I mean, what do you think? Would you keep some of the crypto for yourself, buy some of it as a hedge, but then you're centralized? Do you care? I mean, most people that believe in Bitcoin believe in decentralization, staying out of government control, having the freedom, or do you want to trade that for the safety? I don't know. It's a weird place to be. All right, over in Pakistan, our friends over there are going to be having crypto mining farms for the very first time. Over in the province of Khyber, they formed a federal committee to create a new cryptocurrency policy, including government-backed crypto mining. As part of this new policy, the KP Crypto Advisory Committee has decided to pilot 2 hydroelectric-powered crypto mining farms. That's pretty cool. The committee had its first meeting on March 17th, and they basically said that Khyber is going to be mining cryptocurrency and basically making Pakistan rich. Because, I mean, I don't really know. The last time I found anything in Pakistan, I didn't think it was the most financially well-off country. But if they're going to start mining Bitcoin with hydroelectricity, and the government's behind it, I think the government knows what's going on. Whatever the money is in Pakistan, I don't know, but Bitcoin would certainly be better than whatever they have. Anyhow, I'm David O'Neill. That was Crypto News Today. I'll see you tomorrow for Crypto News Today tomorrow.